Maybe we'll cut this thing, maybe not, but we'll see. Even if we don't see 300,000, at least we'll be alive.
I would exit a deal if my gut is telling me something's not right.
99% of people think about is, oh, it's my competitor.
We've done 375 loans in those 13 years. Last year I did 60.
I had Ruski money.
Instead of getting personally disappointed or upset.
I saved Cory's life. I'm not kidding. That's what lazy is. It's a natural thing. I want you guys to understand the basis to your success.
Value Add Podcast. Unfiltered insights from real estate's most successful players. Always adding value.
Welcome to Value Add Podcast. My name is Rafik Moore. I'm the CEO of Brait Capital, an investment company located in Minnesota. And today we have a special guest, Cory McClure. Cory McClure is not only my friend, my partner, my investor, but mainly he has been my original capital partner. And I want you guys to meet him and understand how he thinks, how he philosophy, and how he operates, because I want you guys to find Cory McClure's in your market. And if you don't, you can always call him and he will be happy to invest.
Sounds good. Thanks for having me, Rafik.
Always adding value.
And then how do you start investing in real estate? You are an executive or some kind of a corporate guy, right?
I was doing computer software sales, computer hardware sales right out of college for 13 years at a computer company in the Twin Cities. Got laid off during the Great Recession, like 08, 09, and then just started getting into property investment. Just saw the opportunity. And
how much capital did you start with?
Oh, that's probably had about 300,000. Mm-hmm. So I was buying a house, fixing it, selling it, or keeping it.
Yeah.
I'd keep it, I'd refinance it, and started doing about 3 a month, about 35 a year.
Nice.
But I first was wholesaling. Before I started flipping my own, I was wholesaling. That's when we met, when I was wholesaling stuff that I didn't want.
And you probably saved out $300,000 working this corporate job. So just like me, not a silver spoon fed guy with trust fund or anything. Just all of us here are self-made guys, except for some of our friends. Of course, we're not going to mention names. They know they're watching. What's interesting is when you meet other investors, the first thing that 99% of people think about is, oh, it's my competitor. And they want to keep their information guarded and stuff. My approach is different. My approach is always, let's collaborate, let's work together, let's unlock this value and share the upside together. And that wholesale, you sold me the property, made a little bit of money.
Then I started doing hard money lending.
So Cory became a hard money lender. Any of your hard money lenders could potentially become your partners because they already know real estate. They know the interest rates, points. And then I say, look, you can make more money if we do it this way. But Quincy was the first one. Interesting. I remember that house.
Quincy was the first one. 115,000 I lent you early January. Late March, you paid me back 120,000 and change. I made like $5,000.
I made 50.
Yeah, on one of my hard money loans. And then after that, we did 21 together, all the way to 2012 for the next 6 years.
With 21 as a hard money lenders, borrowers.
We're Equitron Holding. I lent you Investors Capital, LLC, Bell Properties.
Bell Properties.
LLC, and Caspian Ventures, LLC. Those are the 4 properties. You were flipping houses with partners, yourself. And I lent you about $3.7 million over those 6 years, right, on 21 different properties.
Do you recall when we actually started the Envision commercial? So Cory and I own a company, LLC, holding company called Envision Commercial LLC. And the intent there is for us to collaborate where Cory provides most of the capital or all the capital in the beginning. And I provide the deal, the hustle, the work. We own 9 properties right now in that portfolio.
Vision was, the tagline of it was helping tenants envision to be
owners,
property owners. So first one we bought was on Bloomington, or in Bloomington Avenue in Lake Street.
In Lake Street, yes.
Restaurant that the restaurant owner wanted to buy. The property, wasn't able to, had some down payment. You and I bought it with a bank loan, sold it back to him on a contract for deed.
4 apartments upstairs.
Yeah, 4 apartments, salon
and restaurant.
Back. So one of those older 1930s, 40s built. So we started Envision. I did look that up. June of 2018, 7 years ago. We've had 13 properties total. We currently have 9, and we sold 4. The other one we sold was on Lake Minnetonka.
Yeah, Park Avenue.
That was, I think, our one loss.
Yeah, we lost money on one. So one thing that you have to
happens.
learn is
We got a lot of doubles and home runs and one loss.
one of the biggest issues that so much of what this is psychology of managing your relationship, managing egos, right? Cory is a very successful guy. I'm not as successful as him, but but my point is
Opposite. Equally successful.
yeah, everybody's successful in their own ways. But Cory is a really good dad. He's my mentor in how to be a better dad. I always watch him with his daughters and love it. Anyhow, I guess what I'm trying to say is that if you meet somebody in a networking event, a hard money lender, an investor that's flipping houses, and you really lean in and understand who they are, how they think, what their investment philosophy is, and find a way to collaborate and add value to them. When I approached Cory, and we did a lot of deals at the time, I was short on money, as always. I'm always short on money because every time you buy a property, commercial asset, you need to put down 100 to 200, $500,000, $1 million. And of course, deals got bigger and more complex. But I had a deal, and I thought, this guy wants to buy the restaurant. I got to put down $100,000, buy this property. We're gonna make $100,000 on it. Plus, there's about $3,000 to $5,000 of cash flow every month. Yep. It's really a layup for us as investors. And I said, Cory, if we're gonna do this, the returns are gonna be well in excess of 14% for you. I think it's 20, maybe 25%. I don't recall. And if you do it this way, and if you trust that I'm a good partner, let's create an LLC. Let's try one, and then when you try the first deal is nothing but a down payment on the next one. And so I see a lot of people haggle over $2, $5, trying to earn more money on their construction or whatever. And I'm like, dude, it's wrong. Serve your investor, serve your tenant. And if you do it right, they'll come back to you. You did another deal with that customer.
I did two more
deals with that customer. Yeah. We did a lot of deals, and Cory and I have very similar values: integrity, work ethic, consideration. I'm just a little more active, and I'm all over the Midwest now. But he opened his hard money lending business grew into a very, very successful enterprise. Tell us about that.
I migrated from flipping houses myself. I was doing about 3 a month, 35 a year for 4 years. And then I built my portfolio of houses that I kept to about 43. Decided at that point, kind of step back from flipping properties and instead starting lending out money to one of the rehab contractors that worked for me. He came to me and said, I'd like to do what you're doing, but I don't have the funds, but I have the skill to flip the houses, which he did. He was a contractor. So again, partnered with him, started up a partnership that we split the profits at the end. I would put up the money, he'd do the fixing. And therein kind of launched my hard money lending business. So I've been doing that since 2012 for the last 13 years.
How many loans do you do per year now?
We've done 375 loans in those 13 years. Last year I did 60, turned through about $63 million over the last 13 years. And
you hear that? $63 million that Cory, on average, generates about 14 to 15%. What's your average yield?
18%.
18%. That's not average. That's what you charge. But then don't you have fallouts? Don't you have but I don't know. You tell me. What is your average return when you talk about the full lending business?
If it's my funds, it's 18%.
Is what you charge?
Is what I charge. 3 points up front, 12% interest, 6-month term. So I turn it twice. So I collect that 3 points twice a year to be 3 plus 3 plus 12 is 18%.
Do you have payroll, or do you run everything yourself?
I have one person on staff that helps me with the documents, and she probably charges me 8 to 10 hours a month.
So it's basically your business.
$300 a month for an admin to do some paperwork and track some of the loans, and then a loan officer that just gets paid on the closing statement by the client. So I do get money from friends, family, relatives.
You raise money to do that.
I pay them 8%. So if I am using somebody else's money, I net 10, they net 8. Still the 18% return is just split with my partners.
Good income.
As partnerships and adding value and helping others, people that money sitting idle in the bank. My dad, my uncle, my friends, my neighbors, I want to put it to work to earn more than 8% on something tangible that they can see and touch and feel.
Well, that's why I set up Brait Secured Fixed Income Fund. And I just need me a Cory to run it because I'm so busy with buying my own buildings. but maybe we can team up on that. And we've talked about it.
Yeah, we did our first one last week.
Yes, we did the first investment where we did a hard money loan.
Mark that down as an milestone,
yes.
2025.
Exactly. Now, you are a hard money lender today.
Correct.
How many partnerships do you have with guys like me where you are a capital partner?
3 others.
Okay.
Yep.
So describe to me your philosophy in picking the right person to work with when they have a deal and you provide the capital. Because the biggest thing that my audience has, or some of my mentees have, is the limiting belief that they don't have any money, so they cannot do deals. So kind of elaborate on how you work with your investors and what do you look for?
Mainly their character and the longevity that they've been working in the industry. So individuals like Marlene, who I've been lending money to, kind of like I started with you, lending them money. They were doing flips. They migrated into commercial, bigger deals, syndications, and we kind of grew the relationship.
You built a relationship with them.
Built the relaship, have the trust, have dinner together, call our friend like I call you a friend, same type of thing. We mutual belief in a lot of the investment philosophies we have, but likewise just family and friends and how we work together. So
values are very important to you.
Yeah.
When you team up with them, because who wants to be partners with litigious drama queen, right?
So we've had good success. We try one and it goes well, and
do another one.
Go to the next one.
Yeah.
I haven't had too many partnerships that have failed or gone wrong. There's been ones I just haven't entered into because it didn't feel right. We didn't have the same values. We didn't have the same vision. We didn't have the same work ethic. Ones that I felt like I was doing anything and everything, and they're just kind of on my coattails versus let's do this together, and we're each putting in 110% and working mutually. Some of it have been family, and some of them have been investment partners like yourself.
One of the things that I want to share with you is there's guys like Cory who are real estate investors who have cash, who invest, but one of the reasons why they will share upside with you or as a managing partner of the deal is when you have access to a deal. But outside of just having access to a deal, Cory is, and many, many people also will always judge your character. Now, they cannot know about your character in a first meeting. But if you don't believe in the possibility of this happening to you, if you don't go to these networking events, if you don't do the legwork and study the subject matter, if you don't understand how the economics of deals work, you'll never get there. And so one thing I tell my students, my mentees, is that you need to believe that this will happen to you. The ability to do deals and make money and be financially free is possible to you. And you got to keep going into these networking events, meet with other investors, collaborate with bankers and title companies, and take people to lunch. And that's when magic happens, because every single city, every single town will have hundreds of guys like Cory. Not to mean that Cory's a boring white guy. I mean, there's a lot of wealthy guys with capital that would be elated to get 15, 18, 20% on the investment with somebody who has good character. So one thing that I want to tell you guys, character is one of the biggest things you want to invest in, and that's your brand. It's comprised of integrity, humility, consideration, the values that guys like Cory and I and many, many people that I know like is discipline, right? Not being all over the place. You come one day, say, oh, let's do this apartment building. Next day, say, oh, let's invest in Bitcoin. Third day, you come, oh, let's invest in a startup for, soybeans or whatever. And so what happens is they lose interest in you. They think you're a bumbling fool. But if you consistently tell them, hey, I got this apartment building. Here's the thing, though. Cory probably said no to me 5 or 6 times before. That's okay. But my secret is when I was doing these deals, I had 5 guys like Cory, my partners. My relationship with Cory, my relationship with Fred, my relationship with Andre, and many, many others allowed me to have this opportunity to buy these buildings. And the urban legend is that I had Ruski money, like Russian Putin money. Like, how is this guy? Where did he come from? This guy going around town buying everything, and he must have some kind of Russian backing. I was like, well, let him keep talking. Like most brokers, like, nah, no, my partners are right here.
Yeah, an Irish broke.
Yeah. Exactly.
German.
What's been your favorite deal so far with us? And not Burrito Loco, I'm sure.
Not Burrito Loco, no. Probably the favorite. I think the Invergrove Heights Mall was the favorite. It was one of our first ones. It was half full. It was quite a stretch to, buy it initially and then trust that we were going to get that other half filled up.
For those of you who don't know, I have actually a video on that on that deal. Yeah, we did a video a couple months ago. But anyway, so a wholesaler calls me and says, hey, I got this building in foreclosure, 14,000 square feet. The guy's completely lost it. And I need $20,000 for you to take the property. I was happy to do it. We walked through it. Initially, didn't work out. And then we bounced. 2 months later, the seller called me directly, said, hey, let's go back to the table, drawing board. We ultimately bought that property for $650,000. It needed a roof. It needed an asphalt. It was 50% occupied. And I think we spent, $300,000 to stabilize the asset?
Yeah, about that. Yeah.
So we are into it for $1 million. And based on the pro forma, based on NOI and whatnot, this thing is worth $2 million today. So effectively, Cory and I made $1 million in equity. We didn't pay taxes on it because it's not realized gain. But the property has been cash flowing consistently around, $10,000 a month?
Mm-hmm. Yeah.
So for those of you who are starting out, go out there, find a 14 to 15 to 20,000 square foot property that's distressed. There's a lot of distress right now, guys. Economy is struggling. People are struggling. Then find Cory. No, find Cory first, okay? Or call Cory. He'll give you contact information. Find the building, right? Understand the problem. Solve the problem. And then once you stabilize that deal, it will change your life forever. You can quit your job. You can have passive cash flow coming in. And that deal didn't take us a lot of time, right?
No, it was just finding a good leasing partner and Rustam and landing that tenant. And wasn't a lot of, it was a daycare prior.
Yeah.
So it was already configured correctly. Just needed to be cleaned and freshened and reoccupied, and the building spruced up and looking nice and not distressed.
One thing about daycares, they're really good businesses because they never leave. They serve local community. People keep multiplying. There's a lot of kids. And these daycares, they stay there for years, 10, 20 years. And so this daycare will pay off the thing. If I was a daycare operator and I was really, really smart, I would call Cory or me and say, guys, I want to buy it and cash us out. But it's okay. We could just sit on it and another 5 years or 10 years pass and the building will be paid off. Yep. But Envision's mission is to sell these assets. Because we're flipping houses, we were like, we're going to flip these commercial assets. But if you keep a property, makes $10,000 a month and mortgage goes down and the value goes up, there's really no necessity to sell because you got these long-term leases. One of the questions I want to ask you, which is very important for our viewers, is what is your advice to a new investor?
I would think the best thing is to figure out your core competency, what you're best at, and then establish a team around you of what you need assistance with. So I knew when I started flipping houses that I was good at the processes and the business part of it, but I wasn't going to be swinging the hammer and I wasn't going to be looking at all the properties.
So contractors, realtors.
Good, right, exactly. Realtors, title company, contractors, financial advice, CPA, accountant. You could do it all, but don't try to do it all. I turned in my 40-hour-a-week job for an 80-hour-a-week job running that business. There was no way I could do all those other components. So find trusted partners to establish your business first and have that structure. But as far as working, with me on the hard money lending side, it's just showing some track record. Funding a first one is difficult. Do a couple yourself, show that you've been able to be successful, and then partnering with somebody
with experience
becomes easier to do.
So effectively, one of the things that I'm hearing is that if you have never done a deal, unless the deal is smoking hot and unless you're absolutely amazing and Cory likes you, very unlikely he'll do a first deal with you. But that shouldn't preclude you from pitching to Cory or guys like Cory. You pitch him once, you pitch it to 10 guys, right? Out of 10 guys, there's one chance, one guy will probably give you a chance. Boom, you got one going. Then you pitch these 10 guys again on a second deal, on a third deal, on the fourth deal. And eventually, all 10 guys want to do business with you, and you have unlimited amount of capital available for your deals. Ask me how I know. What is the biggest blind spot most new investors have in raising capital, in your opinion?
Probably just initially focusing on just contacting banks, financial institutions, the standard, regular, typical way that you would finance, and thinking, well, I don't have a good credit score. I don't have good, tax returns. I don't have good savings. So I can't get a loan from a bank, so I can't do this.
When I met Cory, my credit was in shambles, just saying.
Yeah. So if you're starting off finding alternative sources of financing, people that, friends, families, coworkers, relatives, or other investors that have been successful, like you, like me, like others, that you can learn from them along the same time as getting funds from them. So